Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update video. Normally I do these on Thursdays, but today is Tuesday, September 13th. I'm coming to you guys a little bit early because I felt it was important to get you guys this information. Today we got a new inflation report that was expected to be in our favor and help mortgage rates. But unfortunately, the inflation data came in a little hotter than expected, and that's had a big negative effect on the markets. The stock market, I believe, as of 12:30 p.m. on the West Coast, is down about 1,250 points, so a big drop there. And then my side of stuff, the mortgage bonds and the U.S. Treasury have both been, affected where it's negatively affecting rates. So I wanted to get into that data with you guys and show you what's going on. So this is the August data. So we receive it about mid-month, the next month. But this is the consumer price index, which is the Fed's favorite a way of looking at inflation. And like I said, the estimate was to come in this month about a 0.1 negative reading. So coming down a little bit, which is a positive. It actually came in at 0.1 up, going up, which doesn't sound like a big difference, but has definitely made a big difference in the markets. So as you can see, the headline, everything all together was at, like I said. And then year over year, it did drop from 8.5 to 8.1. But I think this number, MBS has this wrong. I think they believed that should be 7.9 was going to be the estimate. And it came in at 8.1. Core strips out food and gas. And so that came in at 0.6, where the estimate was 0.3. So that's basically where we got the big jump. As you can see here, gases actually went down. Gas is what saved us from having this look even worse. Gas is down 11% for the month, 26% year over year. That is being put up against all these other numbers: food, rent. Medical was another one that went up quite a bit. So besides gas, the cost of living keeps going up for Americans, and then that's why this inflation report came in hotter than expected. And like we've talked about before, inflation is the number one enemy of mortgage rates. We hate mortgage rates hate inflation. When this doesn't come in as expected, it's going to have a negative effect. So, what does that mean overall? Looking at things currently, it seems like the next couple months could be a little dicey. After this month, we'll get, mid-October, we'll get September's information. And the way these indexes work for inflation is each month. So this month, which was August 2022, is replacing in the yearly numbers is replacing August of 2021. So August of 2021 was a positive of plus 0.3. So, what's being replaced by plus 0.1. So it's actually gone down. That's why, it'll go down a little bit. So the positive, and then September, like I said, September is a little dicey too. Numbers we'll get in October, because September was a pretty low number, 0.4. So, depending on how, this September's numbers come in, it won't be replacing a huge number. But starting in October of 2021, that's when inflation really started to kick in. So for October, we would receive that information about this time of the month in November. So mid-November, we'll get October's numbers. And in October, it was plus, last year, it went up almost a full point, so plus 0.9%. So this year's October number will be replacing that. So if this year's October number came in at plus 0.2, that's going to drop 0.7. So that's going to be a big drop. And then going forward from that point, October, like I said, is almost a full point at 0.9. November is 0.8. December of 2021 was 0.5. January is 0.9. February is 0.8. And then March was all the way up, is 1.2% increased. So again, if March comes in this year is 0.3, we're going to almost drop a full percent off of inflation. And then going back in the spring next year, the numbers were a little bit marginal, so it wouldn't be as big of a drastic change. But that is why, in our industry, we're confident that, end of this quarter, end of the fourth quarter, so again, November, December, into early part of next year, we should see an improvement in mortgage rates, because those numbers will be replacing much worse numbers from last year. The problem in the short term, though, is what do we do now with rates kind of spiked up over the next couple months? Obviously, these next 2 months, everybody should be paying very close attention to their clients on both sides of deals. Realtors should be making sure everything's going good too. There's ways to offset this. Obviously, we've talked about before, you can buy down rates if it makes sense mathematically for your borrower. You shouldn't overdo it. We shouldn't be, especially knowing that going forward things should drop, we shouldn't be overcharging clients up front for a cost that they'll never recoup. So if we, charge you $10,000 and you're only saving $200, that's going to take 50 months to recoup. If we refi you next year when all this goes down, you never recoup that money, and that wasn't really worth it. But that is a way to help offset some of this rate increases and how it affects borrowers. So like I said, let me get out of here real quick. I wanted to show you guys that real quick. Like I said, you'll probably be hearing stuff on the news. Inflation came in hot. You'll probably hear about stocks dropping quite a bit today and rates spiking, depending on what you watch. So I want to give you guys that data, show you why that happened, and then also clue you in on kind of what we expect going forward. Like I said, the next, this month and next month, the data might not help us out. So we might be kind of, looking kind of like floating along and hoping we kind of stay where we're at. But once we get in November and we start to see those numbers replace higher numbers from this last year, we should see mortgage rates start to come down as inflation comes down. And that would be much appreciated on my side of things. I'm sure everybody listening to this, realtor, borrower, I'm sure you guys would all appreciate that as well. So that's all I had for you guys today. If you guys need anything at all, please let me know. If you have any questions on how this all works, please reach out, and I'd be more than happy to help you guys. Have a great day. Thanks a lot.